Tuesday, January 16th. Market analysis, Stan Ehrlich. Sorry I'm so late today. Had some important appointments. So what have we got? You know, I start out with the stock market indexes. The E-mini March futures contract is right in front of you. Now, I got a bearish engulfing ER sell signal on December 20th. It's given me a headache for quite a bit. But it looks today like we probably have a double top starting. I've talked about this before. If that's true, and I'll draw in the minimum downside objective here real quick, you're going to take the lowest low between the two highs and the approximate, right around in there, highs. I'm going to cancel the extension. That is the depth of the formation right there. So you take this measurement and you flip-flop it down below the lowest low, just like that. I'm looking for a downside objective of 45.62.5-ish, but this is an area where it looks like there's very good support at 45.97.98, and I think there's a very good chance the market could stop at this point and go right back up in a new high ground. Probably it's going to take into February because we've only got a couple of weeks left, and I think the next week or two could be down. So I think double top is starting. March E-mini futures contract. We'll see if other charts corroborate that idea. We have a new low and a new low close likely for about a week now. We need to break below on a closing basis 47.02-ish. Next chart should be the spider, but it's the 5-minute, and it is almost low and last at the moment. So I'll change to the daily spider. And here we go. Bearish engulfing in December 20th again, of course, and double top, slightly higher high Friday. Remember, we had a holiday for most markets, some futures trading yesterday. Yesterday, Martin Luther King Day. So today is Tuesday, the first day of this week after a 3-day weekend. So probably a new low close for about a week. We need to break below some of these other lows, and then we're on our way to testing the lowest low between the two highs, the breakout point for the double top, and just eyeballing this. It looks like it's coming right back into that same support area, which is good. This is not a bear move. It's a short-term, probably a week or two, downside correction in a longer-term bull market. I really don't think we're going to go all the way down to 441 to close that big gap. Next chart should be the DIA, and I'll make it that. Now, the double top still is there, but it's kind of camouflaged because it never did go down very much between the two highs. And I did get it on December 20th, bearish engulfing, which seems to have started this process. But unfortunately, like many times, green at the bottom, green at the bottom, red almost at the highest high. I think that was the second highest high on top right there. Frequently, my red and green ER sell signals and buy signals are the highest high and lowest low, like, should I remind you, October 13th of 22, the bottom of the bear market and the beginning of this bull market, to the exact day. So, new low and probably a new low close for more than just a week or so with the DIA. It's getting weaker faster. So keep an eye on this. We would have an official downside breakout of the whole mess if we get down below the low on December 20th, and that would be below 370.61. And we're 72 1/3 at the moment, so it's not far away. Hey, it could happen today, and that rhymed. Next. I'm sorry, let's go to the QQQs. Good. Daily data chart. Almost a bearish engulfing, not quite. Today's high is almost the same as Friday's, which is the same pretty much on Thursday, which is very close to the previous high overbought conditions on December 28th. So double top. Breaking out to the downside would be around 395, and the minimum downside objective would be in the ballpark of a gap closure. Yeah, 378.80-ish. And a very good support area on top of that in general. So that's it. A week or two from now, I think we're going to go down there. And I want to show you the 2000, Russell 2000. Different story very much. We had a bearish engulfing again on December 20th. Didn't work the way I like them to work, being the highest high and the lowest lows, etc. But it's the beginning sometimes of top and bottom formations. So in a sense, good warning. Overbought conditions stopped it finally, and that's a new high for a long time, a year or something. And then down we came quickly, gapping down no less, and that gap has not been closed yet. Now, this is a new low and a new low close for a month, but we're just beginning to approach a little bit of a support area at today's lows. Reason for it to start bouncing a little bit or stop going down quite so quickly. But I do think it's highly likely we're going to get to 187.90-ish. And in fact, there's a good chance it'll drop off to 183 and small change. And lastly, I'm going to show you the NASDAQ March futures contract. Whoops, the scaling is off. There we go. Sort of a double top like the E-mini. Need to come down somewhat significantly to break out of the formation. Take a few days to do it, maybe a little more than that. And then we still have another move down. I got to think in definitely the area of 15,500-ish. Okay, futures. Now, the first futures chart is the E-mini again from a little different perspective. And if you have any questions, comments, whatever, say hello. info@ersignals.com. I just did a interview for Do You Want to Trade or Want to Trade, the name of the website. Nice gentleman from Bangkok yesterday evening. His Tuesday morning at that time, in California, Tuesday evening. So, or Monday rather, evening. Anyway, it'll be available probably in a couple of weeks after he does some editing. The mini. No really comments, change of comment from here. Just a little bit different perspective on a longer term basis. And this is going to be the NASDAQ, same kind of commentary. I want to go through this quickly because I'm very late today. Bonds, new low and a new low close coming down to the next support area, 117, high ones. Let's call it 118. Probably straight away. Well, wait a second. We're almost oversold. So on the way down to about 118, I think there's going to be a little bounce on the way down, but still 118. Next, 10-year notes. We're out of our previous long trade. Soon I'll erase that from the screen. And now the overbought condition is showing a little bit more bearish evidence. It looked a little ambiguous the last couple of days, but now I think I'm on the right track again. So I'm looking for a minor new low and new low closes and probably coming down in the ballpark of 109 in a week or two. Next, crude. Sideways trading range, not doing much, no breakouts one way or the other, sort of a pennant formation started and well underway in an area of support. So can't rule out a rally, but it's just not happening. And I would say up to 80. But again, I'm waiting. Next, natural gas, starting to look a little more bearish. New low, likely new low close for a week after being overbought and in resistance. So I'm looking for a move down to test the lowest lows here at 2.139-ish. Yep, can't help it. Long-term bear market underway again. Heating oil. I'm going to have to say basically the same thing. I know it broke out of this wedge or downward slanting pennant, downward slanting wedge. And I know it's supposed to hold at the top of the wedge on a retest, which it basically did a few days ago already. But this is not particularly encouraging. I'm going to wait a little bit for more decisive comments. Next, gold. Major sell signal on the top here, December 4th, a scream bloody murder at the time. Probable head and shoulder top developing. Shoulder over here. looks like a small head and shoulder top all by itself. As a matter of fact, it certainly does. The head of the formation, again, was the highest high on December 4th, and the last shoulder high, December 28th. Neckline, very close, 2017. At the same time, it's going to be breaking into new low ground for a couple of months or a month and a half when it breaks the neckline, if it does. And it's about to break out to the downside below a previous resistance, now support area. And that's going to just get more bearish more quickly, etc. My minimum downside objective is 1836. Next, silver. Coming down. Not quite the same pattern combination, but I sure as heck got a sell signal on the top December 4th. Wow. And the high almost exactly, and the high exactly, and the high exactly, and the high exactly, and the low exactly. There's a low exactly. I'm having fun with this. So some signals didn't work, obviously, but remember, those yellow dots are our initial protective stop. They more than likely move very quickly sometimes, and very often the first day we're in a trade. So don't believe that they stay at that price for any significant length of time. But at least they're marked right away, and that's where we start. So bearish, looking for new lows, probably a test of the support area down here at about 21. Next, platinum, buy signal Friday. Bad buy signal. Didn't work. But check this out. We opened substantially below the ER3 bid, therefore getting in a lot cheaper. Not a good idea, but the loss was a lot less than we would have had otherwise if we had bought at the green dot, but it opened below it. So this loss is very small, 922.4 to about 913.7. New low close likely, and it could even drop some more today. I'm looking for a test of the lows of the move. This appears to be a longer-term bear trend kicking its heels back up again. Next, high-grade copper. Hey, the metals are all looking kind of dim, a little bit bearish overall. I expect the support area to be tested probably down to 3.6. And if that does not hold, then that could be very bearish longer term on high-grade copper. Next, soybeans. Now, this is not a legitimate buy signal. I've got to apologize. It's getting confused because of the very small one-tick data yesterday, which really shouldn't be there. So that's not a buy signal. All we are is a doji on an inside relative to Friday's trading range. And I'll try to resolve this problem for tomorrow. Still bearish, but we're oversold. So we could see a bounce at any point. Next, bean oil. New low close, fairly likely. Not quite a new low yet. And also it's getting very close to oversold again. We might have a little bit of a bottom here, still in the making. Not quite sure about that yet, but I could see it coming. I just need the kind of price action I like. Otherwise, hey, bear trend, can't help it. There's a likelihood of new lows and a new low close and a next significant leg down, which could get to, all right, I'm going to go with easily 42, maybe even a hair below. Next chart, soybean meal. Although it's rallying pretty good today, I don't trust it for very long. We simply got very oversold and it deserves a bounce. And it's kind of bouncing off Friday's test of a long-term bull trend line. But this is a giant double top. Any close below 335-ish is going to get real bearish. I'm eyeballing this down to something like 240. Next chart. Don't trust the rally. Looking for sell signals on meal. Corn. New low close, going the way of wheat, which I've said off and on, almost on every day for months now, probably since September, October. Yeah. And bearish, looking for lower lows, but it's getting oversold, so maybe a little bounce. Wheat, not quite oversold, very close, and a little bit of support from a previous low in late November. So it's maybe going sideways a little bit more than any other significant trend. But, you know, you got to be bearish long term. I don't see any major bottom developing here as yet. Next, cattle. Not particularly decisive day. Can't come to any major conclusion. We could rally, but I think it's going to stop. The reason for this nice move up since December 7th was very oversold conditions. And now we're so-so on the RSI scale. This is an RSI. It is the custom ER RSI. I learned RSI from Wells Wilder himself back in the 70s, 80s. And it's not exactly the same computation, but very similar. Now, yeah, I got to be a little neutral to slightly friendly short term. But if you're asking me about a month or two from now, lower. Cattle. Now, this is hogs. Hit resistance already. Looks like it stopped. New lows for a few days. I think it's going to hit new low ground completely very soon. In a week or two. 64.30 is the last vestige of support short term. The next stop after that would be these previous lows at 56.90, or let's call it 57. Next chart is OJ. Now we have something. Okay, pay attention. The head and shoulder top formation had a bearish engulfing ER sell signal in the first shoulder high, October 31st. Great. I got my break immediately. Hit support. Bounced like crazy in an overbought condition all the way to new high ground, but it failed again with a bearish ER sell signal smack on top of the high of this market in historically high grounds. Came down and then had a rally approximately on time. I think it was a day early and a little bit lower than my expectation, which was right about in here. Teased me for a few days at the neckline and then dropped below it on a closing basis the next day. Down, 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 and got probably 2/3 to 3/4 to my minimum downside objective, which was almost exactly fulfilled on last week's Thursday's, I believe, low, with a bullish engulfing ER buy signal. Yikes. If this one works, it couldn't get better. We are now long as of today in ER3. We're currently trading almost exactly at the price we got in, which would have been 299.27, current quote 299.05. My initial sell stop is exactly at 191.50. Of course, past performance is not indicative of future results, and if you're crazy enough to follow this, hey, join the crowd. I am too. Next chart. So, rally probably up to resistance at all. I can't, it's a bear trend. So a buy signal and a bear trend may not lead to very big rally. So I don't like a huge one out of this buy signal. I just want it to work well enough to make some money on it. But the problem is it's a bear trend. I think it could very well go below the minimum downside objective, which it missed by just a little bit, but it still missed it. So I wouldn't be surprised to see it go a lot lower in a few weeks. Next. Corn, cocoa. Wow. Okay, on Friday, new high and a strong, looks like a new high close above all previous high closes. But today is, you know, new high by a major amount, new high closed by a very substantial amount, highly likely. Not quite overbought yet, but extremely close. So another couple of days up, maybe up against this bullish resistance line. Now, bullish because it slants upwards, but resistance because we're not trading above it. That would be called a bullish support line. This is the bullish resistance line. We're trading below it, and on the way up over time, we bumped against it and pulled back, bumps against it and pulled back, bumps very close to it and pulled back, and so we could do that again. Next, coffee. Yeah, got to be bearish. New highs didn't hold. It's been a couple of weeks now. Even support didn't hold. I don't know. Not real sure about that comment. Pass on coffee for the moment. Sugar. Nice rally, minor upside breakout, heading toward 2360. probably going to get there. Longer term, neutral to bearish. And cotton. Big sideways trading range since the beginning of November. Got to wait for something definitive to happen. Otherwise, we're between a rock and a hard spot. And back to platinum. Oh, I'm sorry. This is a different chart. Yeah, here we go. E-mini, low and last, still coming down. Spider down 292, almost 3 points lower. DIA down 3.5. That's a pretty good down day. And $1.50 lower on the Qs at the moment. You guys have a great day. Thank you very much. Manana on time.